could start off by, telling you a little bit about myself. So I started into Bitcoin early 2014. So I'm not like one of those original OGs. I'm not one of those people who got into it real late either. So then I started trading it full time in about July, and during that time, I've learned a lot of things through mistakes, and a lot of the things I want to explain today is just some of the mistakes that I've made that necessarily have to be the same mistakes for the new people coming in and trying to trade. So yeah, I've made a lot of mistakes along the way. It sucked, but I've learned from that. I call that doing your tuition, paying your tuition, so to say. But I've learned a lot throughout the process as well. One of the things that I really wanted to talk about during this time is educational TA, as a little bit about Elliott waves, because I've noticed a lot of people on CWN use Elliott wave, doing that, and pattern recognition through price cycles. So good stuff. All right, so yeah, so price recognition. I know you guys have been talking a lot about what Bitcoin's doing right now. I came on here not too long ago, and I remember saying Bitcoin's got a good chance of going to low levels around 4K or so. So one of the things we want to talk about is the support and resistance lines right now, and what we're testing. It's pretty important levels. So give me a second here. I'll put some more trend lines on here so you can understand what I'm talking about. So yeah, for about a year, Bitcoin was in a nice channel, and let me show you what that would look like. Have
Bitcoin Louie, thank you so much for the tier 1 sub.
So this is the channel I was talking about. So we were in it for quite a while, I think since September of 2015 when it really started to ride inside of this channel. Around this time, or late of last year, is when we broke the channel, went up to 20K. And so this one, in my opinion, is when Bitcoin started to become unsustainable. Around the time where I have on my cursor. So yeah, around that time, that's when Bitcoin started to become unsustainable. Then that's when we started correcting from that. The bottom part of the channel, which I'm moving right now, accidentally. So this bottom part of the channel, we found that as support when we touched it at 6K. It was briefly breached, but would pick right back up. So the self-fulfilling prophecy of Bitcoin is pretty much people buy the dip, right? And that's what they've done right here. So they've bought that dip up, brought it back up, and we've tested this channel again right here, but we failed. So when we failed right there, that's when I started to realize that Bitcoin was being a little bit more bearish than we thought. If you actually do a Fibonacci from 0 to the top around that 19-20K level, we can see some really nice similarities of what this is telling us. The 50% retracement was pretty much rejected. The 70% retracement was rejected when we realized that this trend line didn't hold. And I'll show you what that would look like as well. Okay, so what I mean by the 50% was rejected, you notice on the apex of this channel and the resistance trend line I just drawn is pretty much at the apex of this triangle right here. So yeah, the apex of the 0.5 in this triangle is pretty much intersecting. And when we broke that trend line, that just means that we were already rejected by that 50% retracement. Obviously, we weren't going to break out bullishly at that level. And so we're looking for another support trend line to work from. Well, there's several that we could use. There's one right over here. Since 2014, that parabolic move, we can actually use that and find our next trend line. Now notice that this trend line I just drew, it intersects pretty much at the 786 is right at the apex of our new trend line, right? And then there's some other ones that aren't as major as support. Well, they will act as support, but I think will be kind of just for means of chop, really. And really, that's the next level we have to go to be major support and resistance. So one of the things that I think will happen with Bitcoin is that we won't hardly ever see this V bottom reversal that we've seen at that temporary bottom at 6K. And we can see that. I'll show you an example with the 2014 correction. Pretty much every major correction from a speculative move, such as like a major boom and bust, do not have a reversal at that major V bottom like that. And this is what I'm talking about here, that V bottom reversal. You hardly ever see that at such a crash pattern major correction as such. So what this is telling us, since the 0.5 didn't hold and the 618 didn't hold, then the next level is pretty much going to be the 786 on the fib, at least. So as you can see here, in 2014, Bitcoin sort of did the same thing. You know, it tried to make a hard reversal here. So you have that major V bottom reversal there, and sort of looks like inverse head and shoulders as well. So one thing to know about the inverse head and shoulders is they have a very they have a high probability of playing out as a bullish breakout. They're one of the patterns that hardly ever fail, but they do fail. I mean, the chance of failing is there. And we see it happen there, and this is sort of the state that we're in right now, where in 2014 it had the inverse head and shoulders as so, and then failed. It also happened to be the same thing that played out as well, and the correction cycle that we're in right now. And you also see this in the correction cycle of like the Dow in 2002, and a lot of other crash cycle patterns as well. I can show you the similarity. So there's the inverse head and shoulders there, obviously.
So there was a question in chat. How did you find the second anchor point for that fourth trend line you drew, the one that intersected at the 786?
Well, I just used the top of the 2014 parabolic move, and there's some other areas inside of that channel that kind of play out as well. Let me try to fix it and see what's going on here. So it's the top of this move here. I believe it's the time when the fork happened, and then right after that is when the other fork happened. The second, so the SegWit fork, and then the first top of there is the original Bitcoin Cash fork. Two major times that Bitcoin really tested resistance and support inside of this channel, so I can use those as clear anchor points for the trend line. So here's the inverse head and shoulders that failed right here. Which that plays a pretty significant part of why we're in this pattern further down than we are now. So how does this look like in the Elliott wave process? Well, I have to start explaining about how the Elliott wave does actually play out. I just want to use this as a nice canvas to just kind of explain the Elliott wave process. So as you can see in our tools, we have basically 5 different types of Elliott waves that are there. You have the motive, which is the impulse wave, which I like to call it a motive wave as well. It's sort of the same thing, where you have a basic 1, 2, 3, 4, 5. And so the motive wave runs like this with the trend, and anything that's not going against the trend will be considered to be a correction, whether it be a pullback or a correction, you know. So from 1 to 2, that would be a correction wave. From 3 to 4, that would be a correction wave. And when you finish your impulse wave, you'll have a correction from that as well. So I'm not going to really talk about the Fibonacci relationships with the Elliott waves just as yet. I just kind of want to explain some of these things for some of the people that don't know it. A lot of people, in my opinion, tend to overcomplicate Elliott waves because, for one, there's a lot of rule sets behind it and all, and guidelines that aren't really easy to remember. But if you just think about the principle of Elliott waves, Elliott pretty much spent a lot of time thinking about how the market moves with emotions, and he did it to simplify everybody's life and not really complicate it. But he put so much work into it, he died a poor man. That's actually funny to think about because he put so much time and effort into developing this theory, he never put it to use. So everybody else got to pretty much enjoy and use his teachings in practice. So we have an impulse wave, and then you have a correction like so. Every time you have an ABC correction, the market's going to want to do one other thing after this. When you have a 5-3, it's going to do another 5 wave up. And when you have another 5 wave up and it fails, we'll go into explain what that would mean later. But so we have the 3 wave here, and then let me just draw another impulse. So in this example, you see that I have an impulse up that has another higher high. This is what you want to see in a bullish market, but when you don't see this in a bullish market, when you see another impulse form that's not a higher high, that may have other types of confluence showing you that it's having failures to breach a higher high, that would be considered a failure. So if it looks like this would be a bullish scenario. However, if it looks like this, I'm about to illustrate. Where you have like a really weak 5 wave pattern like that, which is very common actually. You see this when you have a lower high, this would be considered a failure. And what I mean by that, this is the start of what would be called a double combo. So far, we've gone over the impulse wave and the correction. I'll start going over the double combo. Third motive wave up that fails to make a higher high. This would be a double combo, and since the second 3 wave or the 5 wave motive wave going up failed to make a higher high. The C would be W, X would be the denial. X marks the denial. And our Y essentially means that we're going to have an extended correction. Yeah, like so. So from this point, from X to Y, we'll have another ABC. I like that. So this is what a double combo would look like. And then when you finally finish the double combo correction where you have 2, 3 waves like that, what the market's going to want to do naturally is have another motive wave up to test that trend line again. So this is just an illustration. I'll show you exactly how this looks with this whole crash pattern we're dealing with now. I do have a little newborn son, so sorry if you hear him in the mic. But yeah, let's take a look and see how this look like in our crash pattern that we're in right now. I just removed all indicators. Sorry about that, guys.
No big deal.
All right, so here we are. So this is where Bitcoin starts to make its first correction. And then, like I mentioned earlier, when you have your first correction, it's going to want to do a motive wave up. And as you notice here, it's a lower high. And then from this point, when you first see this, this is when you can finally make a our first trend line. Usually want three points of confirmation to make a trend line, but at this point you can see that we have heavy resistance here. And if I pull up a volume indicator, we can see that as well. So at this time, you can see that we didn't have the normal volume Bitcoin's usually seeing to go up like it does. And well, it has normal volume, but it fails to make a higher high. Okay, yeah. So yeah, it fails to make a higher high. Then we don't have the necessary buying volume to come in to make a higher high, and we don't have that much selling volume to make it come back down. A lot of people say that, oh, we don't have enough volume to go up or down, and I like to say, or tell them, or kind of argue that you don't necessarily need volume to have price action. Sure, it makes it hard to go up higher without the buying volume needed, but essentially for every buyer you need a seller, and for every seller you need a buyer. But in this case, you see that we have normal buying volume. It doesn't take much selling pressure to bring it back down, and so we then continue into the correction. This is the birth of a new double combo, and the top of this motive wave here would be considered an X. Where the bottom of A, or the bottom of C rather, will be W. The top of that next motive wave would be X, and now we're in for another correction cycle. Like so. Now, after that correction, like I mentioned earlier, what the market will want to do is have another motive wave going back up. But in this case, this kind of leads me into our next Elliott wave cycle. Our next zigzag, so to say, would be a triangle. Now, there are only two different types of triangle patterns in the market. Well, you have a closing triangle and then an opening triangle, so to say, or broadening triangle. And I'll go into the type of patterns that play out inside of the Elliott wave theory as well. There's only three, and it's not too complicated. So yeah, in this case, it tries to make a motive wave up, but ends up being a triangle. Now, a triangle is a consolidation pattern for a continuation, and when you have a triangle like this, then you'll have a continuation going back down. So in this case, it's not like another correction wave ABC. It does a motive wave going down, because this pretty much sets the trend going down. So the motive wave is down now instead of up. This is the one moment that we've noticed that it pretty much broke the bullish trend that it was making for years. This is when it really officially started to become bearish. So here we go. We have our 1, 2, 3, 4, 5 back down. So after the double combo correction, this is essentially a 3, 5, 3, 5, 3, 5, 5. So this is the next make or break moment where we have our motive wave going back up to test the trend line again, which I'll draw here. And yeah, so here we go. So this is the part where we get to the trend line. This is where everybody's expecting that Bitcoin's going to be bullish again. And of course, all it needs to do is just break above this trend line. And then that's when you start to see a confirmation of your buying volume to come in to really give you the answer that Bitcoin is actually bullish again. But notice right here, we don't necessarily see a whole lot of buying volume. Well, that's to be expected. We want to see it actually break the trend with normal volume. And that's why people wait till after it breaks the trend to get in, and that's when you see that confirmation of that of buying volume come in. Well, we didn't see that. Instead, what we saw was a flood of selling volume and a lot of bad news, a lot of FUD. During this time, this is the time when that Mt. Gox trustee was supposedly dumping in the market, but I'm here to tell you right now that he wasn't the only one selling in the market, and most of that news was probably fabricated BS. So that being said, at this point, we have another denial, and this brings us into our next correction cycle, which would be a triple combo. Now, I'm actually going to delete everything I have here, because all of this pretty much does check out at this point. Yeah, so everything checks out at this point. This is the beginning of our triple combo. Which X marks the spot for our next denial, our second denial. And now what we're trying to do right now is pretty much find the end of Z. All right, so I found out a way to get it broken, but yeah. So that's what we're in right now. It's pretty much an ABC. And if we draw our trend line again from, I think the one that we're really testing right now is this one. I think it's a weak trend line for support. As you can see, we haven't really touched it yet. So right now we don't know if it's really strong or not. We'll see how it reacts from that. But from X, we're in an ABC, and at this point, it seems that we're in sort of a extended correction, and I'll kind of show you what this looks like as well. But we're not at the end of it yet, so I'm not going to try to predict what it's going to look like. We're trying to find the end of C, and wherever the end of C will be from here will be the end of Z as well. And of course, when we find this temporary bottom again, wherever it's going to be, the market's naturally going to have another impulse motive wave to go back up to test this trend line, the resistance part. And easily to note that the lower we go, this resistance gets weaker and weaker because it gives us more of an incentive to buy it cheaper, to break it through at a much cheaper price, obviously. So yeah, is there any questions so far? Because I'm going to get into where these patterns kind of form throughout the Elliott wave process. So does anybody have any questions so far?
There was a question about does the Z have to be below the Y?
It doesn't have to be below the Y. It could certainly double bottom out. There's a chance that would happen, but to me, with the Fibonacci relationship with Elliott wave process or theory, it's unlikely actually that happened. But what you would want to see is usually if what this is telling me really is that W represents where it came down to the 50% retracement mark, and that didn't hold because obviously we came to test it again and it broke through. Y came down below the 618, and that didn't hold because we're below the 618 now. The 618 kind of it went, the 6K mark kind of bounced between the 786 and the 618. So what this is telling me is that the 618 is having trouble holding as well. And when the 50% retracement correction doesn't hold, and then the 70%, which is essentially the 618 usually, that doesn't hold as well, the next mark is pretty much the 80% or the 786. So that's why these double combo and triple combo waves kind of play out like this, because it's testing those levels where this is the 50% mark, here's the 70% mark, and we're going down to test the 80% mark. And so this is what I was talking about when I think there's a not just a good chance that we'll see around 3, 4, 5K. It just depends where it's going to find that buying volume to pick it back up. Yeah, so basically, if you, I mean, at this point, I don't mean to like scare anybody into selling all their Bitcoins, obviously. I think Bitcoin's going to go much higher than 20K. It'll be testing that 20K mark, I think, by the end of this year for sure. We'll have to get through this process. And, you know, one thing to note, though, is, let me go back to TeamViewer real quick. One thing to note is right now in this correction process, we're doing it 3 times faster than the 2014 correction. And that has a lot to do with a lot more market liquidity. And without liquidity, things are slower, you know, but we have a lot more market liquidity than we did in 2014. So so that's the real question now. Where will C end? Where will Z end? And at that point, our next motive wave up most likely will break the trend line, because there's no such thing as a quadruple correction combo. And if it does play out to be a denial again, it will probably play out into a bullish triangle. So that would look something like this, and I thought that was certainly in the case as well. There's no such thing as a motive wave coming back up for another denial to come down and be denied again. So it would have to be a triangle. Which it would look like that. So, you know, when we get to test this trend line again, wherever it's going to be, if we get denied again, don't think that that denial is going to be much worse than what we've seen already. I think most of the damage is behind us, right? This is the other scenario, which would be more of the bullish scenario. In my opinion, though, I think it's a little less practical than the other one I showed you, which would be the triple correction combo. This scenario essentially means that this whole entire thing is in a diagonal / triangle pattern as well. But I've tried to do everything in the subwave count and try to verify everything in the subwave count, and it doesn't seem as practical as the triple combo scenario when it comes to the Fibonacci retracement relationship. But this is certainly in the cards as well, but it's, you know, pretty much the same thing if you think about it. RE would have to come down below the C for this to be a diagonal. And what I was explaining before I realized that I wasn't keying the right key was this whole entire pattern. We haven't made a pattern like this on this scale before, because even though we've been through many boom and bust cycles before, such as 2014 and before, this is what I think we're correcting from isn't necessarily just because we've been through so much hype. This is essentially at the top here would be the end of wave 1 of a super cycle degree. And I can show you what this looks like on the log scale and actually the daily. I can go to the weekly actually. The pattern process that shows up inside of these Elliott waves. And there's only 3 kinds. So you have your first wave, or let's just do a motive wave like this. And so if we're talking about on a super cycle scale, which Bitcoin hasn't completed a super cycle yet, we're only on the first wave, like I mentioned earlier. And if we're at the end of the second wave, most of the time from 1 to 2, this would be considered a flag or a flat. And so there's only 3 types of patterns. You have flats, diagonals, and then flats, diagonals, and triangles. Okay, so from 1 to 2, usually that will be your bull flag. Typically, you see the bull flag a lot from 1 to 2. And the reason why they call it a flat, because if you think of this being a trend like that, and then you have your retracement. So if you have it like this, the reason why they call it a flat, because if you stand it straight up, it would look like this. So that's why they call it a flat. You have a 90-degree angle right here. Trend angles are pretty important when you're doing your technical analysis and things. If you do like the studies of Gon, who did the Gon fan and the Gon square of 9, primarily that's done really around your trend angles. But that's the reason why they call this a flat, because you have a 90-degree angle in here. And if you actually look at Bitcoin, what it's doing now, even though we're in this huge crash cycle, this whole thing kind of looks like a giant bull flag. The reason why it doesn't look like a bull flag here is because I'm on the log scale, which is still sort of the same thing, which is a falling broadening wedge. But the end result of it will essentially still be a bullish breakout. So what we see right now, essentially, is nothing more than bearish market movers forcing the price down as much as they can. So they only have one goal in mind at the end of this whole entire crash, is to get in at the best possible price and become a bull again. Our next trend is pretty much called a diagonal, and this is would be a your bull wedges, or your falling wedges, or your rising wedges, however you want to look at it. Diagonals primarily show up in your third wave or your C wave correction. But also you have leading diagonals and ending diagonals as well that show up in your first and fifth waves. So sometimes you'll have a leading diagonal from 0 to 1, which would be a rising wedge, and then your correction from that rising wedge would be your 2. So if you have a leading diagonal, you won't have an ending diagonal. It's just how it is in Elliott wave. If you have a correction from our ABC, if 0 to A is a diagonal, B to C can't be a diagonal. But most likely B to C will be a diagonal. What we see in this correction is that we have a diagonal from 0 to A. So that means there can't be a diagonal from B to C. And I'll kind of show you what I mean by that. So if this is a falling wedge, that means that this second part can't be a diagonal. So what does that mean for us? That means that it's probably just either going to free fall or do a triangle. And this whole entire thing, no matter if it is a big triangle or a large triple combo correction, essentially on the super cycle, or since we're in a super cycle correction, the cycle scale of, or the degree of it, would still just be an ABC. And however this plays out in the sub degree of things whether it be a double combo, triple combo, triangle, or whatever the case may be, it's still going to be an ABC in the cycle scale of things. And what I mean by that, if you just look on here, if I double click this, you see right here on the degree, you have super millennium, submillennium, grand super cycle, and super cycle. Well, we're in the super cycle scale of things right now, and we haven't even completed that. The other things, these larger degrees, when we finish a complete super cycle motive and a correction, then that is the first wave of a grand super cycle. And to be honest, if it took us 10 years to get to wave one of a super cycle, there's a lot of other things telling us that a super cycle probably will last about 70, 80, 90 years. So when we get to a grand super cycle scale of things, I will probably be dead. So that just gives you an idea of the degree of things, where the minuscule is basically your 1 minute cycle of things that pretty much do not matter. So well, they do matter, but they're not as significant as these larger degrees up here. But the ABC I was talking about is on the cycle scale of things. And if the primary scale of things, which would be your double or triple combo correction, I keep saying double, but we're in a triple combo correction right now. There's no doubt about it right now. So that would be the primary scale of things. And for everything you wanted to look at inside the triple combo would be your intermediate, and the minor would basically be your 10 and 5 minute graphs, trying to predict everything happening around there. So I'm talking a lot about Elliott waves, and I guess you can call me an Elliott waver, but we'll tell you right now, do not use Elliott wave to try to predict what the graph is going to do in the future. I have used, as long as you know what cycle and what wave count you are on right now, it's good to let you know kind of what you are to expect in the future. So no, I don't use it to kind of predict price action in the future. I just use it to be kind of on the same page as price action. So that being said, there's a lot of other things to try to pick tops and bottoms and inside Bitcoin. That's why the Fibonacci relationship with everything is also super important as well. So there you go. I mean, I've just explained what all of these Elliott waves mean. You have your impulse wave. I've gone over the correction, triangle, triple, and double combos, and there's nothing else more to it than that. But I implore you, if you are interested in doing Elliott waves for yourself, I implore you to essentially remember and use the guidelines and rules, because they really do matter. And I do have a PDF of these rules I'll share with Easy or Mike or anybody else to share with you guys to have as a resource, because it's a lot better in my opinion than trying to search for the stuff on the internet. Yeah,
That'd
so
be awesome, man. Thank you.
yeah, that I use it as, it's like my Elliott wave Bible. So but there's a lot of stuff in there that you know, I'll look at some wave count and I'm like, well, is this possible, you know? And sometimes inside of the that PDF I'll share with you, there's some things in there that even I or other people don't quite understand or grasp yet. So there's a lot more rules than just 4 can't trade in the range of 1, and there's a lot more to it than that. But if you think this is interesting, I hope that you give that a read and really use it to your advantage in the future, because one thing that I see a lot of people do essentially is they'll do 1, 2, 3, 4, 5, and then A, B, C, D, E. 1, 2, 3, 4, 5, and an A, B, C, D, E. And that's just not how it works, man.